And once again, welcome to another edition of the Market Review, where we bring you developments in the Nigerian financial and capital market as it relates with the economy. It's July 29th, Wednesday, 2020, and promises to be interesting as we give you some insights into what's happening in the market. But let's give you a lineup for what we will be looking at today. We'll give you a review of market performance for yesterday. We'll also be giving you corporate results and announcements. They are trickling in, and we just want to let you know what's happening with quoted companies and their performance, particularly second quarter of 2020. And we're also looking at the corporate finance business valuation masterclass, which wrapped up yesterday. That's from Coronation Capital, and some market developments that we've seen beginning of the year. And we in July, this is the last week for July 2020. Let's begin with the equities market. Yesterday, the investors lost 69.61 billion naira as the NSE ASI dipped by minus 0.54% amid negative market turnover. The equities market closed negative and showed a depreciation to close at 24,650.16 basis points as against plus 1.46% appreciation recorded previously. Its year-to-date returns currently stands at minus 8.17%. Market breadth closed negative as Berger led 14 gainers as against 17 losers, topped by Total at the end of yesterday's session, showing an unimproved performance when compared with previous outlook. The market turnover closed negative as volume moved down by minus 11.53% as against minus 2.41% downtick recorded in the previous session. Mutual Benefits, FBN Holdings, and Access Bank were the most active to boost market turnover. MTN Nigeria and Guarantee Trust Bank topped the market value list for yesterday. Cornerstone Insurance led the list of active stocks that recorded impressive volume spike at the end of yesterday's session. Let's go on to the FGN bond space from Zcrest Publish and ProShare. The FGN bond space started on a quite interesting note yesterday as actions from profit takers gingered slight action, especially in the tail of the curve. The day kicked off with better offers for the 2035 and 2050s papers, which were matched with available bids in the market. The 2035s opened the day with its trades settling around 8.9% and then gradually increasing to 8.95% levels. By midday yesterday, trading moved up actively but slowed with more offers shown. Bids became less aggressive, making it difficult to close trades while quotes stayed stuck at 9.05% and 8.95%. The 2049s and 2050s weren't left out in the market actions yesterday, with most of the trades settling down around 9.7% levels. Subsequently, yield compressed by an average of 6 basis points day on day across the benchmark curve. Zcrest expects that today, the market trades will continue in these ties in the FGM bonds with more actions from profit takers, especially at the tail of the curve. Let's get on to the Treasury bill space. The OMO bills yesterday continued in a slow tide, which was largely bidded, with poor offers making it difficult to seal trades. Most of the market bids were from March to June, bills with no offer to show for the trade. The few offers seen were for December and January bills, albeit better than the previous day's levels, but still far lower from the bulls' expectations, who were resisting picking these bills at the mid of 3% level. Consequently, yields dropped in the Treasury bill space further by an average of 14 basis points day on day. The Treasury bill space saw a bit of action in retail sizes at the belly of the curve, which settled around 1.9%. However, yields stayed flattish across the NTB curve. For today, Zecrest expects the OMO space to coast around these levels, except the Apex the Apex Bank, that's Central Bank of Nigeria, intervenes with a possible OMO auction to ease the market. While at the NTB space, expects a bit of calmness as attention shifts to the primary market auction and its possible outcomes. Let's go to the morning market. For yesterday, the interbank system liquidity stayed adequately buoyant, opening the day at 740.1 billion naira, although it saw a slight uptick in the overnight buyback and overnight rates, albeit less significant, with its rates closing at 1.33% and 2% respectively. With no significant funding needed today, Zecrest expects rates to hover around this level during the trading session. Let's go to the foreign exchange market. The FX market stayed very quiet yesterday, as for most part of the trading session, with rates unchanged across the different market segments, except at the iron FX window, that's the import and export FX market window, where the naira dropped, appreciating slightly by 0.25 kobo, closing the day at 389 naira 50 kobo to $1. Albeit banks are still largely bidded in that space. For the euro bonds, the Nigeria sovereign tickers traded on a discrete note. Yes, that was what the euro bonds, the sovereigns, traded on. And this was largely bullish across the curve, with the market gaining most of its action on the 2025 paper. Zecrest saw slight interest for few longer dated papers, although in small sizes as such yields compressed by an average of 7 basis points across the sovereign curve. The Nigerian corporates tickers traded on a quiet session also, as the only movement seen was on Zenith 2022s and Fidelity Bank's 2022s, which strengthened by 4 basis points apiece. Those are the updates from yesterday's market activities. Let's get on to some corporate results and announcements. First, from Lafarge Africa. Of course, ProShare did an analysis on its recent results, and we're taking this from ProShare Research in terms of the analysis on the Lafarge Africa performance for first half of the year 2020. It showed that the firm's revenue grew by 2.3% in first half of the year 2020, while it dropped by minus 5.1% in second quarter of 2020. The finance cost dropped by 67% to 4.43 billion naira in first half of the year 2020 from 13.33 billion naira in first half of the year 2019. Its profit before tax grew by 86% to 28 billion naira, while its profit after tax also grew by 156% to 23.33 billion naira in the first half of 2020. Operating margin expanded in second quarter of 2020 as a sharp contraction in office and general expenses bolstered the impact of cost efficiency. Net asset dropped slightly by minus 24% in second quarter of 2020 compared to first quarter of 2020, while it improved by plus 54.6% year-on-year in second quarter of 2020 compared to second quarter of 2019. In terms of revenue and product line, Lafarge Africa PLC grew its revenue by 2.3% in first half of 2020. The revenue increased to 120.5 billion naira in first half of 2020 from 117.9 billion naira in first half of 2019. However, the firm recorded revenue of 56.8 billion naira in second quarter of 2020 as against 59.9 billion naira in second quarter of 2019. This represents a drop of minus 5.1% year-on-year. The dip in earnings in second quarter 2020 was driven by a decrease in the sales of cement by minus 4%, while revenue from the firm's aggregate and concrete products also dipped by minus 64%. In terms of profitability, Lafarge profit before tax improved by 86% in first half of the year 2020 to 28.76 billion naira from 15.45 billion naira in first half of the year 2019, while its profit before tax also grew in second quarter of 2020 to 19.4 billion naira from 10.9 billion naira in the second quarter of 2019. This represented a growth of 78%. For finance costs, Lafarge Africa's finance costs remained relatively low in the second quarter of 2020 compared to the corresponding quarter of second quarter of 2019. The year-to-date figures stood at 4.43 billion naira in first half of the year 2020 as against 13.33 billion naira in first half of the year 2019. This represented a 67% drop year-on-year. All through 2019, the firm's finance cost has kept growing quarterly as it shuffled from 8.32 billion naira in first half of the year 2019 to 20.18 billion naira in fourth quarter of 2019. For net assets for Lafarge Africa, its net assets dropped slightly by minus 0.24% in second quarter of 2020 to 352.14 billion naira compared to 352.98 billion naira in first half of 2020. Year-on-year, its net assets improved by plus 54.60 to 252.14 billion naira in second quarter of 2020 compared to 227.78 billion naira in second quarter of 2019. For ratio analysis, the current ratio, Lafarge Africa remains highly liquid as its current ratio stood at 71.6% in second quarter of 2020 as against 91.68% in first quarter of 2020 and 75.31% in second quarter of 2020 respectively. However, its current ratio relatively below the figure for the two comparing periods. For the acid test ratio analysis, its acid test ratio stood at 45% in second quarter of 2020 from 46% in first quarter of 2020 and 42% in corresponding quarter of second quarter 2019. This further buttressed the current ratio as it suggests that the firm has enough liquidity to meet its short-term debt. In terms of share price movements, the share price of Lafarge Africa has so far shed minus 14.29% year-to-date as against minus 7.67% year-to-date loss recorded by the Nigeria Stock Exchange All-Share Index as of July 27, 2020. This shows that the share price of WAPCO has underperformed the ASI by 6.62% so far in 2020. But in the last 1 year, the share price has recorded minus 16.67% loss. That's the ProShare Research analysis on Lafarge Africa PLC's first half of the year 2020 performance. Those are the things you get from the stable of ProShare, Nigeria's leading financial information hub. Let's get on to corporate announcements. First from Nemeth today. It's a big day for Nemeth Pharmaceuticals. They will be having the board of directors meeting. Nemeth International Pharmaceuticals is having that meeting today where the financial result for third quarter for the period ended June 30th, 2020 will be considered in line with the exchange rule. As for the second quarter, I'll correct that now, second quarter. The company has commenced the close period on the 14th of July 2020 up to 24 hours after the financial statement for the second quarter ended 30th June 2020 is released to the public. Consequently, directors and other insiders of the company have been duly notified not to deal in the company's securities during the closed period. That is from Nemeth Pharmaceuticals. For NCR, members of the NCR PLC, the company, had its 68th annual general meeting held on Wednesday, that's last week, 22nd July, at the function room, Muson Center at 11 a.m., proposed and unanimously passed the following resolutions. That pursuant to Section 259, subsection 1 of the Kama Bill, Otumba Adekunle Ojora be and is hereby re-elected as the director of the company. That pursuant to Section 259, subsection 1 of the Kama Bill, Ms. Georgie Uluz will be and is hereby re-elected as the director of the company. That the directors be and are hereby authorized to fix the remuneration of the auditors Ernst & Young. That Alhaji Mustafa Jinadu, Mr. Matthew Adedoyin, Alhaji Hassan Uriyomi Tomiwa be and are hereby elected as shareholders representative on the audit committee of the company for 2020-2021 financial year. Following the election, the underlisted will constitute the membership of the statutory audit committee. Alhaji Mustafa Jinadu Mr. Matthew Adedoyin, Alhaji Hassan Oriyomi Tomiwa, and Chief Matthew Akinlade, Director, Mr. Michel Vellier, Director, Ms. Joju Louise, Director, are all members of the Audit Committee. The director's fee will remain as set out in the Note 32 of the company's annual report for the year ended 31st December 2020, and that the components of the director's fees remain unchanged for the 2020 financial year. And that in compliance with the rules of the Nigerian Stock Exchange governing transactions with related parties or interested parties, the general mandate given to the company to enter into recurrent transactions with related parties for the company's day-to-day operations, including the procurement of goods and services on normal commercial terms, be and is hereby renewed. Let's go on to FCMB Bank. The Board of Directors, in the meeting held last week, Friday, July 24th, 2020 at 11 a.m. via Zoom, the board considered and approved the unaudited financial statements of the group for the half-year ended 30th June 2020. The board also accepted the resignation of Mr. Olutola Mobolorin and Mr. Olusegun Olubogun from the board of the company effective 31st July 2020. Both directors, however, remain as directors on the board of the group's subsidiary, First City Monument Bank Limited. Quoted company in the Nigerian Stock Exchange, Okumu Oil Palm, released its second quarter 2020 unaudited results for the period ended June 30th, 2020. And here are the key highlights. Revenue grew by 57.9% to 13.5 billion naira from 8.6 billion naira in the previous quarter. Profit before tax grew by 94% to 5.5 billion naira. Profit after tax grew by 58% to 4 billion naira. Net assets grew by 7.2% from 29 billion naira to 31 billion naira. Also, Triple G released its first quarter 2021 unaudited results for the period ended June 30th, 2020. Key highlights showed that its turnover declined by minus 64% to 124 million naira from 247 million naira in the previous quarter. Loss before tax stood at 57 million naira, 0.1 billion naira to 1.2 billion naira. UBDC Real Estate Investment Trust also released its second quarter 2020 unaudited results for the period ended June 30th, 2020. And here are the key highlights. Net income declined by 4.8% to 1.1 billion naira from 1.16 billion naira in the previous quarter. Profit before tax declined by 14% to 817 million naira. Profit after tax declined by 14% to 817 million naira, while net assets declined by minus 6.4% from 33.5 billion naira to 31.4 billion naira. Those are reports on corporate stories and what's happening in the market. Yesterday was a wrap-up of the Coronation Capital Masterclass on corporate finance and business valuation, where it featured for the second time Professor Aswad Damodaran. This was virtual because of the COVID-19 pandemic and was quite enriching for the stakeholders and all those who participated. Note that last week it started with Monday, that's 20th and 21st Tuesday, and wrapped up this week Monday and Tuesday, that's 27th and 28th. Some major key takeaways from the session showed that valuation is a craft, it's not an art. It's something that you keep developing, and that is something important for those in the financial industry and markets. Very important for climes like Nigeria, that in terms of lending, those who lend must also look at the fact that cash flows for those companies are important, not just the assets. There were interesting insights on the liquidity and on the impacts on valuations, and also perspective on how valuation of companies over the years has panned out. Professor Damodaran, who is a renowned professor and of the New York University Stern Business School with over 3 decades experience in finance and valuation, used the opportunity of the 4 days session to highlight his valuation experience with major brands from Apple to even Amazon and down to Facebook and other key companies across the globe, how these valuations have brought in new perspective on analysis and how you can value companies. Stakeholders learned the dynamics of it and the key imperatives for improving valuation. Additional takeaway for me was the fact that there's a bias in it. It is influenced by bias. Prior to now, the thought has been that it's thoroughly objective, but there's a bias to it, and that is driven also in terms of valuation. The issue of the story is very important. It's one takeaway that there must be story to the valuation. It must connect with the story, and that is very important for people to tie in when valuations are done. Several other very interesting insights from the valuation experience, and this we will bring to you in the course of the week in terms of storylines and takeaways from the events. But you can log on to our website, www.prochange.com, to look at the overview of that session and how it's going to change the face of finance valuation in the climb. The chairman of Coronation Capital, Mr. Igbojak Mugode, who himself is a big admirer of Professor Damodaran and calls himself a student also of the scholar, described the sessions as very, very critical and very rich to improve the financial markets, deepen the space, particularly in Nigeria, and the valuations. This was the same in terms of the perspectives of others who participated. Definitely, the learning experience is there, and it should create exposure and insights for all those that participated on valuations, which is very important in our markets to understand how companies are valued from the share price, even down to the markets, the financial markets, the important areas, and why it can improve the value of companies. One other key component was the fact that brands with consistency, in terms of companies with consistency, that story of consistency helps in terms of valuation. And that was singled out from companies like Amazon. Amazon has been able to keep a consistent story in terms of its evolution, its operations, and that is why, in terms of valuation, Amazon remains one of the top valued companies in the globe. Yes, Amazon. Interesting how Amazon continues to be a big brand on the other hand and a very high valued company. Let's look at market developments. Just one or two I'd like to drop here before we wrap up. This has been an interesting year shaped by the pandemic and the volatility of the crude oil price, which also shapes the activities in Nigeria. And we've seen an increasing appetite for the debt markets from the corporates. Prior to now, it was dominated totally by the government, but now the corporates are coming in and we're seeing issuances, and this is really deepening the market, and those are developments we're monitoring from the FMDQ. It's nice to see how the corporates are leveraging the debt market to drive their operations, and it's a nice thing. I mean, from FMDQ to Nigeria Stock Exchange, we've even seen the likes of Lapo, from Mixstar, Guinness, and recently Nova Merchant Bank, all reporting subscription at high levels for their bond issuances, and even subnationals initially, like the Lagos State government. And the leveraging of digital platforms from the markets has become an interesting story that one can take away for the year 2020. Prior to the pandemic, exchanges like Nigeria Stock Exchange, the FMDQ Securities Exchange, the NASD PLC, even FX Community Exchange had been investing in technology, and that has paid off because during this pandemic, we now hear that market dropped in terms of activity. Activities have moved on remotely, and technologies continue to drive activities in the markets. And we tend to see more investments in that regard because tech becomes the main big thing. And this is why we continue to appeal to governors across the country. Only 3 states now have opened up the space for broadband right-of-way investments because policy helps for investment. We appeal to other governors aside Kwara, Ekiti, and Kaduna states who have already taken that proactive step to ease the right-of-way for investment in broadband that can deepen digital economy. So we appeal to other governors to brace up and improve the space for more investments so that we can have a digitally driven economy and digitally driven Nigerian market activity where even retail investors, wherever they are, can trade, they can carry out their operations and monitor transactions in their market. That's the dream of the Nigerian market. Anywhere you are, convenience, accessibility, and ability to trade and take decisions and even get the required information. And talk about information, you can know that you can always get it from ProShare, Nigeria's leading financial information hub. So that's a wrap for today's market review. And you don't want to miss out from tomorrow, 10 a.m. We'll continue to give you developments in the financial and capital market as it relates with the Nigerian economy. Let's make it a day tomorrow. And to all our investors, please, this period, Nigerians too, beware of those that promise you 100% to 200% returns on investments that are not registered or captured in the Securities and Exchange Commission. Please beware of such, because you don't want you to lose your hard-earned savings and money this period. Till we come your way again, thank you for watching. Have a nice day, and please stay safe.